Welcome to another episode of Bulls, Bears, and Blockchain on Revolution Radio, making smarter financial decisions with your host, Rob Nelson, former Fox News host and anchor at Roundtable Media with his team of market masters, Marc LoPresti, Managing Director of Moneta Advisory Partners, co-founder of Battlefin, leading data platform, and a former institutional equities trader at Lehman Brothers, Alex Mascioli, founder of Trade the Chain, former head of institutional prime brokerage at Bquant, John Najarian, co-founder of Market Rebellion, former co-host of Halftime Report on CNBC, and co-founder of Option Monster and Trade Monster. Daily data insights and ticker updates direct from three of the world's top TradFi, legal, and crypto experts on Bulls, Bears, and Blockchain every Monday and Friday on all your favorite platforms. Let's get started.
Good morning, good afternoon, good evening, depending on where you are and when you're listening. This is Revolution Radio's Bulls, Bears, and Blockchain. I'm Rob Nelson, and I'm joined by my team of market masters, John, Marc, and Alex, and Thomas A. from the Sevens Report, who provides the Monday Global Macro Overview. You listen to hear the smart moves to make, and we're here to deliver just that. Great insights and info in half an hour. John, let me start with you before we get into more of the market stuff and the crypto sphere and everything that's going wrong. Let's just get your picks for the week from each of you out on the table. So, John, you got 3 option picks. What do you got?
All right, Rob, I think I've got 3 picks that are new as far as what we've been mentioning. TTD, which is the trading desk, acronym TTD. They were buying this coming Friday, March 60 calls, and they were paying about 65 cents for those calls. Now, those calls were approximately on Friday about $2.50 above where the market was trading. I like that trade. The trading desk is basically a spot you go to find either to put up advertising that you'd like to buy on a given site, or basically if you're a producer of content like this show, you might actually put some of your content on there looking for people that are looking for content to advertise against. And the trading desk, it doesn't have earnings this week, but it was an interesting trade, and it's been getting right up against 60 a couple times. So that was my first trade. Second one would be Valvoline, which is V, like very, 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 or Valvoline. Stock was $37.25. They were buying the March 40 calls. So again, there's something that's approximately $2.75 above where the market is trading. So that's a bet that over the next 2 weeks, because this is regular March, not this week expiration, but regular March, that we might see a pop out of Valvoline. And I think we all sort of know what Valvoline does as far as lubricants. Lastly, Boil, BOIL. Now, this is a double-levered natural gas contract, and it has been absolutely running to the upside. It was under $6 a week ago. On Friday, it was $7.70. They bought 36,000 of the weekly March 8 calls, so very slightly above where the market is trading. But those calls purchased in that kind of size, 36,000 is 3.6 million share equivalent. I like it. I think it's a cheap shot to follow on. And full disclosure, I've been in Boil and various natural gas plays like UNG for several weeks now.
Marc, what do you have for stock picks for us for this week?
Well, Rob, with the remarkable news out of China coming to all of us over the weekend on Saturday about the Chinese government planning to increase defense spending by no less than 7.2% to 1.56 trillion yuan in response to the perceived threats from the United States, combined with the associated commentary about how while Beijing is hoping for a quote-unquote peaceful unification of Taiwan with mainland China, that it takes and plans to take, quote unquote, resolute steps to oppose Taiwan's independence. China really ramping up the rhetoric and ramping up spending on national defense. I think that this is going to be a tailwind for U.S. defense names like Raytheon, like Lockheed Martin. Raytheon announcing last week that it was awarded a $250 million contract from the Space Development Agency, the SDA, to build missile warning and tracking satellites. And looking, of course, at the increase in defense spending that was already authorized in the last budget for the ending Q3 2023 United States budget of an additional $800 billion in defense spending for that fiscal year, in response, of course, to the Chinese threat and the Russian threat. And then, as we've said on previous shows, we are, as I like to say, colloquially, we're out of bullets in this country because of the support that we've given to the Ukraine. So we think that this very serious news out of China over the weekend should provide a tailwind for defense stocks like Raytheon and Lockheed Martin. Also, we're looking on the bear side. We think that this is going to be a bearish week for cryptocurrency-related stocks. Even a stock like Coinbase, which has benefited a bit from a flight to quality following the FTX debacle. But we think that what's still in the works in terms of really bad news coming from crypto-associated bank Silvergate will continue to be a headwind, not only for cryptocurrencies broadly, but also for crypto-related names on the equity side like Coinbase.
So, Mark, two quick questions. One, and by the way, we really should have General Tata come on and talk about the defense industry's app. When you talk about, obviously, ammunition and all that, are there some other sectors you're thinking in the defense area beyond like weaponry and ammunition? I mean, are we looking at like kind of there's a sort of an info war going on as well, right? Are we going to see our military probably amping up? I don't know if that's in the AI space or in the virtual warfare space.
No question about that, Rob. That it's been repeated by watchers of this particular sector, like General Tata, and I'm sure he'd be willing to come on the show. We only need to ask to talk about this. I, of course, shared the stage with General Tata just a couple of weeks ago at a conference in Miami prior to the fireside chat I did with Ambassador John Bolton, talking about these very similar issues. But cybersecurity and vulnerability, and where very smart people like General Tata and Ambassador Bolton think the next global war may be waged, we may not see it at all. It may be waged entirely in cyberspace. And so there are names like CrowdStrike, which I believe is reporting earnings as we come out the backside, the back nine, if you will, of the Q4 2022 earnings season upcoming this week, amid an absolute torrent of jobs data and commentary and testimony from JPOW, I believe on Wednesday and Thursday of this week, if memory serves correctly. So you can also see the names in cybersecurity, to answer your question specifically, that are associated with providing cyber defense solutions, both to private industry as well as to the government sector, benefiting as well from this increased threat level and rhetoric from China and Russia.
We just got the world blowing up all around us. So let's, Alex, speaking of blowing up worlds, it seems to just go from bad to worse right now. But Silvergate, we talked about this last week, and now we're looking at what's happening with Silvergate, right? Isn't just bad news for retail onboarding. This is bad news for institutional investing, right? I mean, this is getting not better, but worse.
Yeah, I mean, the key to crypto is capital efficiency. And the Sun network, which is the Silvergate exchange network that Silvergate had set up and built a handful of years ago, was the go-to place for these asset managers and institutions. And Mark touched on it on the last show, when he was at the conference. This is going to hurt asset managers and institutions greatly because they rely on the on-off ramps of the SEN network. There aren't a lot of options, particularly if you are onshore, offshore to the U.S. And as we saw after our show last week, where we all gave insight onto the Silvergate, issues going on. They shut down the Sun network, and it's only gotten worse from there. So, where we go from here, I don't know, because there's going to be a lot of creativeness that's going to have to happen to prop up that capital efficiency and fiat on the crypto side.
Part of the crypto picture, you have a couple of things that are looking promising right now. I mean, it's interesting, right? Because, with John and options, there's always a way to make the market work for you if you're doing an option. With crypto, it's challenging, right? The whole thing's almost moving like a giant glacier.
It is. It is. Before I get to that, I just want to, I'm going to be interested. I'm interested to hear what Mark has to say about the Silvergate, issues that are going on, because is it going to bring more regulatory eyeballs on TradFi? Right? They're a TradFi bank. Their minority position in banking is crypto, but they are a TradFi bank, as all banks are TradFi banks. So is this going to give reason for people like Gensler and the other regulatory bodies to come in and say, listen, you're no longer messing up your own sandbox. You're now affecting, the rest of the world? We'll see. But for this week, I got two picks, two standouts rather than the three, because of the week we had last week. But let me tee it off real quick with where we are as a baseline, the market. As Mark mentioned with Jay Powell, we got employment numbers coming out Thursday. Powell speaks to the Senate Wednesday, along with the Fed speaking every day this coming week, except for Tuesday. Total market cap is 1.03 trillion, which is about par for every week in the last 4 weeks that we've been in. Total trading volume, 29.8 billion. Very low. And as I suspected just before the weekend on the last week's show, created, the exchange outflows created the low volume, low volatility. Plus, Bitcoin ETH price getting hit hard on the Silvergate banking woes. Total crypto tweet volume has even dropped and is 185,000 tweets for the day, down 17% versus average on the Trade the Chain dashboards. Bitcoin sitting at 22,400, only up 0.69%, with sentiment at neutral 52 out of 100. Ethereum not doing any better at 1566, up 0.41. Also with Trade the Chain sentiment at neutral, 49 out of 100. Now let's get to my two standouts. Two standouts for this week are IrisNet, ticker IRIS, up a whopping 46% in 24 hours on 32.8 million in trading volume, which was 210% higher versus average. Tweet volume 103% versus average. For those who don't know, IrisNet is a service protocol. It's built to provide blockchain-based open network solutions to small and medium businesses. It combines on and off-chain capabilities by separating transactions that are executed on the blockchain from data processing, which is executed off chain. Iris is up 113% in the last month. Second one, Maker, ticker MKR, up 11% on the day, 25% for the week, on 100 million in trading volume, up 100% versus average. Tweet volume up 47% versus average. This one may be up on the news of the MakerDAO restructuring proposal, which will allow for borrowing DAI with the MKR token, the Maker token. But this has been met with some criticism, as it has some very similar traits to the Luna UST model, which, as we all know, a little less than a year ago this month blew up fantastically to the tune of $40 billion of market cap. Maker is the governance token of the MakerDAO and Maker protocol, and DAI and software platform that allows users to issue and manage the DAI stablecoin. So what are we looking at? I'm just going to wrap it up with equities covered well late into last week, but crypto continued to slide. I would look for crypto to snap back with equities quickly in the start of the week, or if it's going to FUD on negative job numbers that people are talking about on towards the end of the week, then more pain will be likely to come.
About to get to the global macroeconomic stuff with Tom. Is there a space in crypto right now? I mean, it's such a baby market. It's such a grow in its infancy. Is there an area when all this chaos is happening that is kind of a more secure area to be looking at? In more mature markets, you can kind of go, you're almost always safe over here or, over here. Is that what Bitcoin is at this point or Ethereum, or is there a space in the market right now where you're like, this is probably the safest place to be with all the chaos swirling around, or isn't there one?
No, listen, everybody knows the most stable place you could be is stable coins, or if you're in equities, cash on the sidelines, right? But, it's important to listen to people like Mark and Tom, because what's happening in the macro environment and in the economy as a whole on the TradFi state is very reflective of what is happening on the crypto side, right? So we follow along. We're the smaller nascent market. And so we have to follow what happens there, because more than likely we're not going to deviate until we hit further down the road maturity.
Tom, perfect segue to you. Look, what is happening in the global macroeconomic market? And as always, you have your sevens report, seven things every day. With us, you give us three cherry picked in the best or the worst.
Absolutely, guys. Thank you very much for having me on again. Already a fantastic conversation. I admittedly am somewhat of a novice in the crypto space, especially on the inner workings of it. And I learned so much while listening, waiting for my turn to speak here, from Alex, Mark, John, everybody talking. It's really fantastic content. I mean, you just don't find stuff like this out there. And trust me, I know, because I look. And so it's really neat to be able to listen to that. Getting back to my wheelhouse, one of the biggest sort of themes in the market from last week was how resilient the market is. If you think about it, we've had a big time jump in expected Fed funds rate hikes. We've had a big time jump in 10-year and 2-year yields. I mean, the 2-year yields at the highest level since 2007. And stocks are only like 4 to 5% off of the highs of 2023. So a lot of people are looking around saying, gee, why is the market so resilient? And the answer, we believe, is still that the market doesn't think the Fed is going to dramatically hike rates over what was previously said. And so in order for this market to stay resilient, that has to remain true. The market has to believe that the Fed may go a little bit higher than they said they were going to in December, but not that much higher. That makes the three most important things this week all jobs and Fed speak related. And it's simple why. If the labor market does not cool down, or the Fed says they're going to push rates really a lot higher, then this market will not be able to stay resilient. And when we say, what is a lot higher? Well, right now the market has peak Fed funds, and you may see terminal Fed funds out there in the press. All that means is peak Fed funds. It's at 5.625%. You get that number starting to push towards 6%, then we're going to have a different market, I guarantee it. So this week we have the JOLTS report, Job Openings and Labor Turnover Survey. This used to be an unimportant report. It's important now because it tells you how many job openings there are. Pre-pandemic, about 7 million every month. Currently, 11 million, right? That number has to go down back towards 7 million. Second most important event this week, Powell's testimony. He's going to be before the House and the Senate. In the past, sometimes these testimonies can rock the boat and provide a surprise, especially if he's trying to guide the market towards 50 basis points at the March Fed decision, which is going to be in 2 weeks. I don't think he does that, but it is a possibility. And then the final event this week is, of course, the jobs report. Guys, to show you how important these are, the last jobs report, the January one that printed like 515,000 jobs, the market fell 6% following that number over the past several weeks, right? And if we get another really hot number, don't be surprised if the market falls again. So those are the three things we're watching this week.
Everything tells me it doesn't appear the jobs market is going to cool. And it doesn't appear the consumer spending's backing off. And the Fed doesn't appear to be suggesting that they're not going to be more aggressive, that they will be more aggressive. So what makes you think that it's not going to go the way you just said, Tom, that the Fed is going to actually raise rates more than they indicate?
So I think that the most important thing people need to remember is that the Fed hiked rates 450 basis points last year in essentially 10 months, because the rate hikes didn't start until March, right? That's a pace that I don't think anybody in the business at this point has seen in real life, because the last time we saw it, it was in the very early 80s, right? Late 70s. And I think the Fed is cognizant that if they just keep going at a breakneck pace or just keep going every meeting, then the economy may be like Wile E. Coyote running over a cliff and then look down. And now they've really caused the problem. They're gonna have to reverse hard. So I think it's the number of rate hikes and the intensity of last year that will get the Fed to sort of pause more than perhaps the consumer spending and economic data would naturally imply it.
Which is where I want Mark, where you weigh in on this, because you have a great term. I think you call them the feckless Fed, which might suggest they're going to Wile E. Coyote us right off the cliff.
Yeah, I think the risk of that gets worse by the day. I think the numbers that we're going to get this week, the JOLTS report and the other job numbers that we're going to get this week that also coincide with the times that J-Pow is going to speak, are going to come in where I think a lot of the street is expecting them to come in, which is to demonstrate a resilient and still strong job market economy here in the United States. I think it's going to disappoint the Fed. I think the Fed is continually disappointed by what appears to be, and yes, it's sector specific, resilience in consumer spending, which continues. We've seen in the earnings for Q4 that we've been through, so coming out of the end of this earnings season this week, certainly pockets of weakness as names like Lowe's and Home Depot, and even some of the commentary that we received from the CEO of Macy's towards the end of last week. But it is not the weakness that this Fed is looking for. This Fed is looking for the economy, the U.S. economy and the U.S. consumer to do the damn job that the Fed should have started doing 2 to 3 quarters before it started to raise rates, right? And I think once you've embarked on a journey where the map and the goal is fundamentally flawed, once you've started with a catch up and a makeup situation that the Fed's embarked on, you are almost guaranteed to have a less than perfect result. And I think most market watchers would agree with that. The question is, how bad, right? Do we have a soft landing? Do we wind up in a stagflation position? I don't know. I tend to be, as everybody that listens to the show knows, I tend to be a bit of a bull. I tend to be a bit of an optimist. I tend to believe more in the American consumer and the American economy than this Fed or this administration patently does. But for the week ahead, I think we can guarantee we're going to have a volatile week with this torrent of job numbers. We're going to have a volatile week with this Fed speak. And I'm going to go out on a limb, folks, and I'm going to say, I think we hear a tone from J. Powell that is markedly hawkish this week. And the market is not going to like it. And any of the interest rate sensitive stocks, including names that, as John likes to talk about very intelligently, that are highly levered and therefore particularly susceptible to rising rate environments, to perform poorly this week. That's what, when we do the recap on Friday, I think we're going to be saying that we were right about those things, unfortunately for investors.
You heard it first here, though, on Bulls Bears and Blockchain. So, John, let me start with you. Just on this, we've had so much, both crypto and TradFi instability in the last couple of weeks. But looking just at the TradFi markets, right? What stands out to you as sort of, whether it's a macro or a micro thing, that you think is going to have the most impact kind of this week in terms of the market space? What are you keeping your eye focused on? And I know you've got a lot of things to pick from.
I'd say 4% for the 10-year. That was a level that we broke above a week ago, Rob. And if we break above it and stay above it, it's not going to be good. It's going to be really hard for the market to deal with that. And if I had to pick another thing, I'd say, the natural gas market has been just moving up very quickly. And the double levered ETFs and things like that track it, whether you short the cold, KOLD, or buy the boiled, BOIL, both of them have been great plays in the last week. And I think that continues.
Mark, I want to get you on this combo. But John, right, one of the beauties of the option plays and stuff like that, right, is there's really no market you can't actually find a way to make some profit in and to do okay in.
True. When energy's hot, we play that sector, and it is heating up again. Like I say, natural gas in particular. When EVs are hot, you can play that through NEO, NIO, Rivian, RIVN, Tesla, of course, TSLA. But there are so many ways to basically define a sector or an individual stock with options and have a limited risk trade that you have leverage to the upside. And that's the name of the game.
When you look at Silvergate and the fact that Silvergate isn't actually, a real bank, by real bank, I mean a TradFi bank, as all banks are, as Ali said. What are the implications of what's happening here with the crypto side to the TradFi side?
Well, I think it's exactly that potential for contagion in traditional banking as a consequence of the route that's going on in crypto, occasioned primarily by the debacle and the demise of FTX and other issues that we've covered in depth on this program. Because when if you thought we had some regulatory aggressiveness before we saw a traditional bank that's part of the non-crypto banking ecosystem that regular non-crypto people rely on in this country, when you see something like that fail, wow. And listen, one thing that we have to point out here on the Silvergate story, Silvergate sought and received a bailout of sorts before this recent news came about. And it's a bailout, almost $4 billion from the Federal Home Loan Administration. That is as TradFi as it gets. And so this is fodder for regulators, for legislators, for politicians to say, look what's going on here, folks. We have Main Street bailing out Crypto Street. I don't even know if we've come up with a name for that, Alex. It used to be Main Street versus Wall Street. I don't know what that
We just did.
We might have, right? Crypto Street. So I think I think that Silvergate is doomed. I said it last week and I'll say it again. This is one that we did not want to be right on when we came out on Friday morning show and turned out that, and having said, we made that prognostication 8:30 Friday morning. By 5:30 Friday afternoon, Sen was shut down, right? That was not one that I wanted to be correct about. But I don't think that Silvergate can expect another red cent from the Fed in terms of a bailout, having already received one, and against this absolute torrent of ill will towards crypto. So it's bad news because it's going to leave a significant void in terms of DeFi to TradFi, crypto to fiat rails for any U.S.-based trader or asset manager. And I'll tell you what, I'll ask the question back to my very astute and talented friend Alice Mascioli. Why? I know Bitcoin and Ethereum are off since this news on Thursday and Friday, but why are they not off more? Why is Bitcoin still at 22.4? It should be as relevant to FUD as anything else that's come out since FTX.
It's a great question. Yeah. And Bitcoin is stabilizing. So yeah, it's a great question.
It is a great question, but I'm not sure we've seen the last of the fall. I think there's going to be another leg down, especially going into this week's news with the jobs numbers. But listen, it was Sen just went down right after we spoke about it, Mark. Big blow. No one wanted to be right about it, like you said. But I don't think we're going to see the fallout until those asset managers come this week or next week or the week after are unable to use those capital efficiency on off ramps. And then I think you're going to see volume possibly drop more. And you're going to see Bitcoin price fall with it, which would just be a propellant to whatever, Fed news comes out. I think we're just at the beginning of this. I don't think we've seen the damage. This was just the first leg down. We already saw volume at an excruciating low level this past 24 hours at 29 billion.
I mean, think about the life cycle of it, right? Like these professional money managers, these crypto hedge funds, FUD generates redemptions. Redemptions generate the need to free up. 90% of these guys pay their redemptions and the subscriptions and pay out their redemptions in fiat, not crypto. There are some that are able to pay out in crypto, but that's the rarefied few. So I mean, are we looking at sort of a snowball effect here, right? As more FUD comes out, as Silvergate continues to spiral down to zero, as that propagates redemption requests from managers that won't be able to necessarily fulfill them without liquidating crypto, like doesn't that all sort of lead to bad things in terms of crypto market prices?
I think you're absolutely right. I think we're going to see redemptions possibly pour in because, to your point, the traditional investors going into this product are not ones that have wallets. Are not ones set up for self custody. They can't be redeemed in kind. There's less than 5% of crypto asset managers that do in kind subscriptions or redemptions, and I think this unfortunately just created the automatic gating system because no one's going to be able to get their redemptions filled unless something innovative comes up.
Well, and last question on this. So how does Binance factor into this? I mean, and I guess I'm asking you that, Alex. I know we don't know for sure, and I know they're in discussions about settling. Maybe that helps them, but it also seems like there's more kind of dark clouds on the horizon about what might happen with them, even though they're in talks to kind of settle things out. Your thoughts on that?
Yeah, listen, the Binance FUD news that's going around, I'm treating it just as that FUD for right now. I've gone through their material showing onboarding, offboarding of BUSD to USDC swaps, and now it's that's how they operate their business. I still see no legitimate proof, positive or negative, about the 1.8 billion that people are reporting on that was rehypothecated for the wrong reasons. I do not, going to the settling part, I don't see Binance settling with the SEC at all. I don't see them coming out and saying, hey, listen, we'll pay you a fine to go away without admitting or denying, which is what most people do when they one, want to save money, two, want to save face, and three, make the 800-pound gorilla in the room go away. I don't see them doing that because if they did settle, it would ruin a lot of initiatives that they have going on in the U.S. They would be more or less saying to the SEC and the regulators, yes, we are wrong. I know you have the whole admit, without admitting or denying, but I think that's about as equal to people pleading no contest in criminal court cases. It's BS, right? You're guilty at that point. If you're a platform. So if they settle, I think the ramifications of what initiatives they have going on in the U.S. will completely just come to a halt at that point. So I don't think they're going to do that. Also, they're wrapped up in, various asset purchases and stuff like that going on in the U.S. and in bankruptcy courts. I don't see Binance going anywhere. The WSJ article, which was put out, or it was just more of a regurgitation of an article that came out a couple of years ago about Binance US being a front for Binance globally. And we've heard it all before, but until somebody comes out with concrete evidence, I'm treating it as just FUD, gossip, and rumor and letting the world go on.
Hey, that's why you listen to this show and forget about the Wall Street Journal. Alex, you're up first. What's your $1,000? Put your money where your mouth is.
Yeah, there's going to be a new one for me, and that's going to be with the market the way it is. And what I expect for next week, I'm going short Ethereum, 2 to 3x leverage. I'm going to call it 2.5 leverage short right now. And that's going to be, I'm going to go into that unless something material changes all the way until the jobs report comes out with employment numbers.
Okay. Mark, what do you got?
CrowdStrike, CRWD reporting earnings this week. We expect them to meet or exceed the street's expectations, in part because of some of the tailwinds associated with the uncertainty in the global geopolitical and military landscape, as well as ever-increasing demand for cybersecurity and cyber-related solutions.
Okay. And John, you pick your $1,000. If you didn't have one last week, and next week I'm going to give you guys a sort of an update on where the B3 index is, the index of all of your picks. But John, what do you got?
Okay, Rob. For $1,000, my trade would be one of the 3 trades that I gave you this week. And as I said, I've been in this one since the stock was below 6. In fact, since it was $4.82. Just recently, I was buying it down there. And that was 2 weeks ago. Now the stock is pushing towards 8. And the numbers, the extraordinary volume in this stock is why I'm buying those calls, because they just keep rolling up from the 6 strike to the 650 strike, the 7 strike to the 750 strike, and now to the 8 strike. So $1,000 on the market, I would be in those Boyle March 8 calls.
All right, guys, awesome show. By the way, it's Bulls, Bears, and Blockchain. And for new listeners, man, you learn so much listening between the lines with you guys. I learn every single show. Everyone's learning from each other, but the dialogue, it's not dialogue you get anywhere else. It's great insight. It's always fun. It's entertaining. But watching what you guys do is always insightful. And it helps people learn how to make money in difficult times and not leave things on the table that you shouldn't. Great show, you guys. Appreciate all of you.
This episode of Bulls, Bears, and Blockchain is proudly brought to you by Verijet, the only solution for short-haul private aviation. To learn more, go to verijet.com. Thanks for joining Rob Nelson, Alex Mascioli, Marc LoPresti, and John Najarian with another great episode of Bulls, Bears, and Blockchain, twice a week on Revolution Radio. Whether you're new to the world of Web3 finance or an experienced investor, we've got you covered. Follow us on Twitter at GetRevRadio and visit our website at revolutionradio.io, helping you make smarter financial decisions.